1031 exchange strategies some investors get wrong. So you just sold an investment property. You're sitting on a significant capital gain, maybe $500,000, maybe more. And someone told you a 1031 exchange would let you defer all of it. It's the perfect strategy, right? But what happens when one missed deadline, just 45 days, costs you $150,000 in taxes you didn't have to pay? Here's the hard truth. Most investors don't lose money on a 1031 exchange because they chose the wrong strategy. They lose it because nobody told them the rules before the clock started. A 1031 exchange lets you sell one investment property and roll the proceeds into another, tax deferred, potentially forever. We're talking about preserving hundreds of thousands of dollars that would otherwise go straight to the IRS. Most investors treat it like a simple real estate transaction. It's not. It has hard deadlines, strict rules, and the wrong replacement property can wipe out every benefit. Here's what we're going to cover: the 5 strategies investors get wrong, and the one property type that solves most of them, especially here in Florida. Mistake number 1. Treating the 45-day rule like a suggestion. The IRS gives you exactly 45 days to identify replacement properties from the sale date. No extensions, no exceptions. The mistake: investors wait until they feel ready, then scramble. By day 40, they're accepting bad properties just to meet the deadline. Start identifying before you close on the sale. Have 3 options ready before you list. Do you know what your replacement property candidates are right now? If not, that's the first problem to solve. Mistake number 2, the 180-day trap nobody talks about. Most people only know the 45-day rule. You have 180 days to close on the replacement property. But this trips up investors who identify solid candidates, then get delayed. The critical insight: if your tax return due date falls before day 180, you may need to file an extension, or you lose the exchange. The fix: work with a qualified intermediary from day 1 and map out the calendar before the sale closes. Mistake number 3, choosing the wrong replacement property. The most common mistake? Investors swap one management-heavy property for another. They defer the taxes but inherit a new headache. Here's the strategy the pros use. Use the 1031 exchange to upgrade, not just the asset, but your entire relationship with real estate. Net lease NNN properties shift all operating costs, taxes, insurance, maintenance, to the tenant. You collect rent. That's it. The income doesn't fluctuate. The lease is long-term. And in Florida, there's no state income tax on that rental income. This is about so much more than deferring a tax bill. It's about repositioning your wealth into an asset that works for you. Mistake number 4. Ignoring tenant credit quality. Not all NNN properties are equal. A national investment-grade tenant is fundamentally different from a local operator. A lease is only as strong as the tenant behind it. In Florida's market, there is significant inventory of investment-grade NNN properties: medical, QSR, auto service. Mistake number 5. Not knowing your DST versus direct ownership options. DSTs are popular: passive, no management, fractional ownership, but you give up control and typically accept lower returns. Direct NNN ownership keeps you in control, typically delivers better yield, and gives you an appreciating asset. The question isn't which is better in general, it's which is better for your situation, your timeline, and your goals. If you're navigating a 1031 right now, or you know one is coming, I want to share a resource I've put together. Contact us at floridatriplenet.com and get a copy of the Ultimate Guide to 1031 Exchanges 2026 version. The Roadmap. Start identifying before you close. Map the 180-day calendar and your tax filing deadline. Upgrade to passive, not just different. Vet tenant credit and understand your DST versus direct ownership trade-offs. Getting this right isn't just about deferring a tax bill. It's about building a structure that generates income for decades. That's what a well-executed 1031 into the right NNN asset actually delivers. Download the checklist at floridatriplenet.com. And if you're working through a 1031 right now, call us at 239-272-1640.